row between Britain and Spain over Gibraltar went up a notch on Monday as London mulled legal action over what they call totally disproportionate border checks implemented by Mariano Rajoy. Joining me down the line for an economic update on Spain and a discussion of the country's sovereignty issues is Dr. Stefan Mütze. Now, Dr. Stefan, with robust growth and nearly no unemployment, the tiny British outpost of Gibraltar on Spain's southern tip is a bubble of prosperity, marking a stark contrast to its neighbour. But how do you see this situation playing out? Would there be a sizable economic advantage for Spain to regain sovereignty of the rock?
No, the conflict should not be escalated further. Spain wouldn't have a sizable economic advantage if it regained sovereignty of Gibraltar. Important sectors for Gibraltar are tourism, shipping, and to a lesser extent offshore banking. It is more important for Spain to improve the economic situation of its economy.
Spain's economy shrank just 0.1% in the second quarter from the prior 3 months, and unemployment fell from the highest levels in the country's democratic history. Rajoy's strategy of making it easier for companies to hire, fire and negotiate contract terms has been accredited to achieving a current account surplus. Do you agree this has been a deciding factor, and do you believe that Spain is capable of sustaining these levels?
Yes, Spain looks to be emerging from its worst recession. In the second half of the year, GDP should increase again after nearly 2 years of shrinking. The reforms seem to be paying off. Unit labor costs have decreased significantly, so Spain is relying on improved competitiveness to export its way out of recession, but it struggles with record unemployment, which has only decreased a little so far because of a good tourist season. The latest figure was 26.3%, high 26.3% seasonal adjusted.
Investors do seem to be already positioning themselves for a continued improvement in data from the Eurozone economy. Do you think the attitude towards risk is already changing, and how do you expect Spanish bond yields to perform in response?
The Spanish bond yields have come down to 4.5% now from 5% in June. Investors seem to be expecting an improvement in the Spanish economy, and there are good reasons for this. For example, PMIs have increased to values over 50, capacity utilization is higher now, and industrial production is no longer shrinking. The attitudes towards risk in Spain is already changing, and so I don't expect an increase for the Spanish interest rates at the moment.
Dr. Stefan, thank you so much for your time and perspectives today. Well, viewers, make sure you click back to the website for all of today's programmes, including Press Review and our Commodities Corner. But for now, goodbye.